Interest rates and your home search in Dane County and in the Madison, Wisconsin area. What you need to know in 2026. Hey everyone, I'm Shawn. Welcome back to our video blog. If you're thinking about buying or selling in Dane County in the Madison area in 2026, one of the biggest questions that I've been getting is, are interest rates high right now? Let's break that down in a way that actually matters for your home buying or selling strategy. First, rates are still elevated, but not unusually high. Rates have dropped about 3/4 to a point in the past 12 months since last February. Right now, the typical 30-year fixed mortgage rate in Wisconsin, including Dane County, is around 5.875 to 6%. That's notably lower than much of 2025, and it's better than some national averages, but it's still higher than the super low rates we saw in the pandemic years. Why does this matter? Buyers are still paying more than they would have 5 to 7 years ago, but compared with the highs of the late 2024 and parts of 2025, it is more favorable at this point. Secondly, small rate changes don't always change the game. Here's the truth. A small shift, say from 6.2 to 5.875%, doesn't always make a huge difference in your monthly payment. But timing your move based on a quarter-point swing often costs more in missed opportunities than it saves in interest. What I mean is, waiting for a slightly lower rate could mean losing out on the perfect home or paying more overall if pricing increases in the meantime, which prices have been doing. So don't try to time the market, focus on your goals and your financing strategy. Thirdly, local inventory drives your outcome more than rates. Here in Dane County, we've got a strong seller's market, still having limited inventory right now. That means homes are selling quickly, buyers are often competing, and inventory matters more than a tiny few basis point rate change. So yes, rates are part of your decision, but your ability to find the right home and win the offer is far more important than hoping rates go down 0.5 point. At the end of the day, timing and your long-term goals matter more than chasing the perfect rate. Let's use a simple example. If you finance $400,000 at 6% versus 5%, that's roughly a little more than 10% difference in the payment, right around $250 a month. That's real money. But here's the bigger picture. If rates drop after you buy, you can refinance. On the other side, if prices rise while you're waiting, you can't go back and buy at yesterday's price. Real estate isn't a short-term rate play. It's a long-term wealth strategy. So the question isn't, can I catch the lowest rate possible? It's, does this move make sense for my life right now and my long-term plan? If the timing works for you and the numbers are comfortable, that's what matters the most. And if you want to run the numbers at today's 5.875% rate, I'm happy to walk it through with you. Please reach out if you have any questions, you want to develop a strategy, get going on your home search or home selling, please reach out to me at 608-212-5743. Our team is waiting to help you. Thanks for watching our video, and we'll see you next time.